Today is October 21st, 2015. This is another great review that we have from Ichimoku Trade, one of the worldwide leaders on the Ichimoku indicator, and this is Manesh Patel. Today we're going to show you the power of multiple time frame analysis, where you're going to use multiple time frames to find key institutional support resistances and how you could take advantage of that information. This is something that we released at the beginning of this year. It's a very powerful tool that no one else is doing it at all, and we want to show you exactly why it's very powerful. Okay. So before we begin, this is a normal disclaimer to state this is for education use only. We're not soliciting you buy or sell any particular instrument. If you do so, you're doing that at your own risk. All the information is owned by EII Capital Group, cannot be copied or distributed without our permission. We are broker neutral, so we do support various platforms from Thinkorswim, TradeStation, eSignal, and so forth. Here's our contact details here, where if you want to get a hold of us, you can email us or give us a call at any of our global office locations here. Okay, so let's go through, and one of the things that we found on our scanner yesterday, so in our scanner here, we have the ability to sit there and search for multiple time frame support resistances. Okay, so you have the ability to scan on 10, 30, 60, 120, 240, daily, weekly, monthly, and you can sit there and find multiple time frame resistances. If you don't know what I mean by multiple time frame resistances, that's okay. All you have to do is go to this video section here, go to tutorials here, and at that point there's an RT scanner here. Go for this video there, and the other thing you can do is go to our workshop videos here and go for any of these two workshops here that we've done. These are live workshops where we go through and explain multiple time frame analysis, so you could go for any of these or any of these others that were pretty much, say, 2015. Okay, so one of the things that we did was we went for a multiple time frame scanner, and we saw basically and opportunities for a particular all the instruments out there. And what we noticed was that Yum came up on our MTF scanner. Okay, and if you look here, Yum was basically a trade here, and what it did was Yum moved up, opened up here, and drastically moved up, and it came straight to this green line here. So what I'm going to do is I'm going to draw a line here at this green line. That was a major resistance here on the daily time frame here. Okay, now I'm going to go down the time frames here. On a 4-hour, it was a major resistance to, which is the green line here in the current price, and also this yellow line here in the future. Okay, so now we had a same resistance on the daily and basically also the 240-minute time frame. If I go down to a 2-hour, it's also the same resistance here. If I go down to a 1-hour, it was also the same resistance here. And then if I go down to a 30-minute, which is day traders here, what you'll notice is that this resistance here, which was the same resistance on a 1-hour, 2-hour, 4-hour, and daily, was the same major resistance here in the past here with this yellow line. So this is what we call multiple time frame resistance. So at a high probability of bouncing off there. So what we did was, since this stock was moving drastically, what we wanted to do was to sit there and take a trade wherever you could sit there, use options or stocks. In our case, what we did was we went at the money options in November, and we basically bought puts on this going down here. Okay, since we were looking at a day trade, we really didn't need to look at the Greeks at all to see if it's expensive or cheap. And the reason why is our goal was to get in and get out of some of these positions. Okay, now what we noticed was that some of these put positions, they were cheap, so what we could do is sit there, take our day trading positions and turn them into long term. So that was one option that we had. So what we did was we entered this trade here, and then what we did was we went down to the day trading time frame. For us, our day trading time frames are basically 10-minute and 30-minute. Okay, so we went down to our 10-minute time frame, and we noticed there was a support here at this yellow line here. Okay, and then what we also did was we went to a 30-minute, because the 10 and 30 gives us a view of all the day traders, and we noticed that the 10 and 30 had the exact same support, which is at 73.16. This is roughly $2 away from our entry. So our goal was for basically the majority of our day trading positions was to exit out as soon as it got here. So we put an alert here. As soon as it came down here, we exited out 75% of our positions. Okay, and now what we did was the other 25% of our positions, we're going to let them ride more on a swing trading time frame, where you could let them ride on the week, on the 1 hour, where you could target this green line here, or you could let them ride on a 2 hour or 4 hour. On a 4 hour, our support basically is down here, or you could even turn it into a long-term position here, where you're sitting there riding it all the way down to different levels down here, or even maybe retest this low down here. Okay, so you have different options you could choose based on your personality and your profile, but basically this is a free trade now. Reason why is majority of our positions were already declared profits, and the rest of the positions where we have 25% of them, what we've done is we basically we would get out at break even. So everything else now is going to be bonus, going down to retest that low at whatever different time frame you want to take them. Okay, so this is a very great example of multiple time frame support resistances. If you guys have any questions, you could basically email us or give us a call in regards to MTFs, is what we're calling it. Thank you and have a good day.